All right, good morning, everyone. Thanks for joining. I think today I don't have a Zoom sessions because there's some technical issues with the login. So I will just go on YouTube Live instead. Anyway, today there's no presentations. I will just go through the questions asked inside the Slido here. So for those who are interested to find out, want to submit questions on the upcoming Slido, please join the Telegram group. I'll put the link at the descriptions. So whenever we have TCSS session like this, I'll post the Slido questions preferably one day before so that people have enough time to post their questions. So let's get started with the first questions here. Why is Broadcom stock still performing well despite the apparent decline in VMware revenues and negative comments on the merger? Actually, I just want to share that I haven't really paid too much attention to Broadcom, but I know that if we compare the sectors, we will compare the companies in the semicon sectors, right? Broadcom is one of the semicon companies that has done well in lately. I think they are riding on the AI trends. So previously, I also read up a bit on why it is so hot, and then I think apparently, I think Broadcom, they have some partnerships with Google in creating the TPU. So, Google, when they are doing their AI stuff, right? They are not just buying Nvidia chips. They also have their own in-house design chip. And that is done with the partnership with Broadcom. So I think that one, I think initially they started up with very small numbers of orders. But it seems clear that from Google perspective, right? This entire thing about their in-house design chip is very important. So I think they have ramped up the orders from Broadcom. So this is definitely good for Broadcom. I mean, in terms of this AI chip developments. About the VMware, I haven't really paid too much attention to this side of business. I don't think this is the part that's pushing up the share price. It's mainly on the AI trend. You guys know that lately everything that is related to AI all going up. So I think that's sentiment-wise, that is definitely something that is encouraging. But I think at this point, I really have no idea whether this entire hype will transfer or will transform into revenue growth, earnings growth, free cash flow growth, and so on. So I'm a bit skeptical, but at the same time, I know that this AI trends, this is real because we all have tested some of the products. We know that definitely this is the future, and you have to bear in mind that whatever that we are seeing now, right, is just something like a prototype or experimental at this moment. So in the upcoming 1 year, 2 year, 3 years, I believe there will be more AI products, AI services that's around, and whoever providing tools or hardware or software that is supporting all these AI related services, right? Definitely they will do well. So I think that's the future. It's just that when looking at the valuations, sometimes I have my skeptical minds. So when it comes to this. Okay, thank you so much for these questions. Like I said, I haven't really studied Broadcom before. I think there's quite a number of good materials on Broadcom. If you just do a Google search, I watched a few of them. I think that's very helpful in terms of understanding the business. But I haven't done any deep dive into this company, so I don't want to comment too much on this. All right, let's move on to the next one. Bunti, last time you mentioned that you start buying China, but so far a bit silent. Can you update us a little on China, please? So I think on these China questions, yes, I think around early this year, when I look at the overall sentiments around China investment, for example, companies like Alibaba, right? They have been trending down for I think maybe about 3 or 4 years now. Then the sentiment is just bad, But when looking at the fundamentals, right, I would say, although they are not super fantastic, like super high growth, but it's still doing well. You compare two things, right? One is on the sentiment. Sentiment is almost pricing in a decline in the business, the long-term decline, not 1 year decline. Then you're looking at the results, right? For example, their revenue, their profit, their free cash flow. Actually, they are doing quite well. Just looking at the revenue and so on, right? I would say that the multiple, a reasonable multiple, should be higher compared to the traded price earning multiple. That's why I was thinking that I mean, this could be a good opportunity to enter, to get some exposure. But of course, this is done with realizations or with the awareness that the sentiment is still bad. When sentiment is bad, technicals are bad. I mean, chances are that it will continue to stay at this kind of how to say, like very bad sentiment, and then share price could still drop from now on, right? So I think that's why my plan back then was like, okay, maybe just add a little bit, but I don't want to add to the extent that, this entire China exposure become large proportion of my portfolio. So that's not my plan, because I don't want to steer too far away from like the global passive allocations. So the global passive allocations, right? Think about it, it's like this. US is about like 60 to 65%. China or the entire emerging markets, right, is only about 10%. Out of that 10%, if you, depending on whether you add Hong Kong inside or not, I think China we're talking about, like low single digit. It could be about like 3 or 4% only. So for me, I think if I just do allocations, right, I think my China exposure is already higher compared to like a global passive allocations. But I don't want to have like more than 20 or 30% into China just because they are cheap. So that's my view when it comes to the investments. So I bought some allocations into China, and this is added on top of the existing exposure that I already have. Because I already have some, China A shares exposure. I have Tencent, and then I have Meituan. So I added some ETF early this year. So with that, I'm comfortable. And then, after that, after I added, I think about like, I think close to maybe around April, May or June, China market also doing slightly like doing okay. It went up, and then I just like take my time to add my allocations. So for now, I don't think I have a very like immediate plan to add into China. Like even if I add, it will be like small add. Like you won't even notice if you're just looking at the allocations, the pie chart that I always share, right? You won't notice that. But that's my view. I think my view haven't changed so much about China. It's more on like I know macro wise they have some problem, and then macro, I'm talking about the economies because their property markets, I think, is still not doing well. It might be like a slow recovery over the next few years, but allocations, valuation-wise, I think is still quite attractive at this moment. But you need to be comfortable because the moment you invest in China, right, I think the policy risk is always there. For example, let's say Xi Jinping just come up with a new policies, and then they shake up certain industries, certain sectors. If you have allocations into those sectors, then you will get whacked. So I think this is something that we all learn by investing in China over the past few years. But if you are comfortable with that, you want to take advantage on the cheap valuation, I think feel free to do it. But just be aware the risk is always there, which is same for US market anyway. Let's say it's just that the type of risk is I would say different. For US, it's mainly because right now there's so much optimism, valuation seems high, but at least policy risk, I would say it won't be as high as China. For China, things can just strike at any moment, right? And you have little time to react. But for US, usually there's talk, there's rumors, there's a news article, and then you can analyze. You are essentially have more time to react to it. So I think that's the main difference between these two. Okay, so I think that's on China. I think I also covered these questions. Can I know both of your views on China investing? I covered this. All right, let's move on to the next one. Hi Bunti, finally a question for you. Nvidia is close to your bull scenario intrinsic value. Will you continue to hold or take the chance to reap some profit? I think to answer these questions, right, let me just pull up my portfolio just for those that you can take a look at my current allocations. So few things to just mention here, right? Like now, Nvidia is really my top allocations, 22.5%. This is really, if you look at from a cost-based perspective, right? Actually, Nvidia it ranked like maybe at most like maybe 5th or 6th. It's definitely lower as compared to like TSMC, Amazon, Microsoft, Apple, Tesla. So the allocations become big because the price ran up. I think that's one caveat I want to make here. Yes, I think in terms of the returns from these positions, I think it went up by 5 or 6 times already. So like it really exceeded my expectations. I like these companies, but if you ask me just 2 years back whether I can foresee that Nvidia can become, the largest market cap in the world, actually, I don't think I will make that bet. So it really exceeded my expectations. So that's on Nvidia. Then in terms of the valuations, right, I think I shared this on the group, the financial deep dive here. So I purposely put this table below the top part one. So the top part, right, this is the DCF that I have done 2 years ago when we have full year result of 2022. Okay, so this revenue, I think this is this 27 billion revenues, right? This is the year of full year 2022. And then this bottom table here, I just basically repeat the same thing. But of course, because the starting point is different, so I need to update the starting point. And then because, now AI, like I can see that the growth is a lot higher, so I also changed my assumptions. So this is the bottom part here. So you can see that actually the fair value, right, has increased significantly just compared to 2 years back because of all these new changes. Okay. And this is not the one that's updated, including the latest quarter. I haven't updated the latest quarter, but it's not that far away. I'll elaborate more later. So you can see this 61, right? I believe right now the revenue is 70 plus billion. Look, I mean like 12 months, last 12 months basis. So I already revised my assumptions on the margin. This is the profit margin. So instead of looking at between 15 to 30%, this is already revised upward to between 40 to 60%. Then in terms of growth, I expected that, for bull scenario here, right? I expected that the revenue will grow by 90%. So if you look at the next 12 months analyst consensus, right, I think these figures, right, this revenue is about 120 billion. Okay, this is revenue. And then on the operating income, basically you just multiply by the margin, you get something about, over the next coming year, right, it will be around 60 to 70 billions. So after I completed this, maybe just focus on the bull scenario here, right? After I completed this, I do an exit multiple of 40 and then do the discounting using 10%. This is before the stock split. I get something like 1,349 million. So sorry, billion. So this is like 1.3 trillion market cap. So even if I threw up these starting positions, including the latest quarter, right, I believe this number, it will be about $150 post-split. So yes, it's already very close to my DCF, so-called the fair value. But remember, this is using the bull assumptions, meaning that it's very optimistic already. Like I don't include any things related to, let's say, now they are selling to those who are desperate to get the GPU, right? At some point, when these buyers, they have enough GPU, they will say, oh, okay, I have enough now. But NVIDIA can always sell their product to, the other buyers. But to do that, maybe they have to adjust the pricing slightly. So I think margin will get a hit at some point. You can't expect like a 60% margin, just continue to extrapolate for forever, right? I don't think this makes sense. So this is, in terms of margin, I think it's already quite aggressive. In terms of the growth, right, I already included the portfolio and not portfolio, the analyst consensus. You see from revenue of just 27 billions 2 years ago, now we are projecting 120 billions revenue 1 year later. So all this is already been factored in. But of course, in terms of the future growth, I'm not that optimistic that it can just continue to grow at 50% for next 2, 3, 4, 5 years, right? So I have to lower down the growth assumptions here to 25, 15, 10, 10%. But to me, these numbers, right, is still quite optimistic, or you can say it's quite aggressive. And yet I come to a fair value of between 130 to 150. So if you ask me whether this is like super overvalued, this is bubble, I don't think it is bubble level, but it's just that it has already incorporated quite an aggressive growth assumptions, and exit multiple of 40 is also quite a quite a big one, because the moment, let's say, the growth slow down to like 25, 15, 10%, which I think will happen at some point, I don't think they can maintain this kind of multiple. It will be like between, I would say fair multiple should be about 30 or plus minus now. Okay, so that's why I would say it's close to a fair value that is based on quite an optimist or quite an aggressive set of assumptions. So that's my conclusions on the DCF here. So if you ask me okay, with this, right, after I talked so much about all this fair value, right, and looking at my portfolio now 22.5%, should I just sell and sell then move on to another companies? I think not so much, because as I said, it's not like 2x or 3x of the fair value. So and secondly, the allocations is not 50 or 60% kind of allocations where my entire portfolio returns. It really just depends on one company, right? So I would say it's okay for now, just hold on to it. But I have stopped adding to these positions for some time already. I think the last time I added to Nvidia probably I guess it's more than 2 years ago. So I haven't really added, but to me it's a whole. So just to share with you, this entire channel, I'm promoting long-term investing. By long-term investing, is really like you look for companies that you like, study their business, add to the positions. After you add to the positions, then just hold on to it and just enjoy the ride, right? By riding, I mean not just the share price. By riding, I mean just riding on the growth in the fundamentals, in their revenue going up, their profit, and their free cash flow going up. I think this is the best part about long-term investing, where you don't have to keep shifting around. I compare this with the previous questions that was asked, right? Like for example, China, right? I believe for China, let's say if just for example, the multiple you think is cheap. The moment the multiple went up by, let's say, 30 to 50%, I believe quite a number of investors will just think about wow, why not I sell now? Because I bought into China, went up by 30%, 50%. I just sell because essentially I'm betting on the valuations, right? I buy cheap. I buy when it's cheap, then I sell when it gets back to fair value, right? I think there are quite a number of investors, they operate like this. They just take advantage on the relative valuations. So they have to do this, buy, sell things. So for me, I think it's not the right or wrong way to do things. To me, it's just like if I keep shifting my portfolio around, it'll be quite tiring, because I need to keep on assessing the fair value. The moment it becomes expensive, I need to sell. Then become cheap, then I allocate more. Then if it become if the, let's say, after I add, then the fundamental change, then I need to revise the fair value. So you have to do that quite often to take advantage of the relative valuation. But for my approach, right? Say for example, this spreadsheet, right? I'm not making updates to this, every quarter. Usually I do it on let's say 1 year or 2 years, when we have enough new informations. Then maybe I do one round and take a look and see whether it makes sense or not. So I don't spend a lot of time doing DCF, just for your informations. But I can't just buy. Let's say if it is 3 times the fair value, maybe that's enticing enough to do the switch. But then I still need to do this kind of work, right? It's just that this kind of work is not something that I do on every quarters lah. So that's my view. Okay, I saw a few persons has joined. Chiong, good morning. Shindo Sensei, why no Meta? So there's a question here asking me why no Meta. I explained this a few years back. Actually, I have Meta, and then when these things about the privacy issue with iOS, right? I'm really concerned with the development, because I think that Meta, although they are very good companies, they are executing it very, very well in terms of their AI roadmap. But in terms of the OS, right, I don't think they have a strong core because they don't own the devices. That's a reason why Mark Zuckerberg spent so much time in developing the metaverse, and then they're also creating devices, right? Like the Ray-Ban devices. I think that's the right strategy. It's just that I'm a bit skeptical in terms of their their core strength, because I don't think that their strength is on the device side. Their strength is really on social media, the apps, the applications layer, not so much about the hardware layer. So metaverse also is not something that I'm very optimistic about. Like I don't think. I think it is the future. It's just that in terms of timing, I don't think this is something that is coming soon over the next, like let's say within 3 years now. So that's why I don't have Meta right now. I would rather buy something that is more stable. For example, like between Meta and Apple, right? I would rather invest more into Apple, because I think they own the device layer, and then they own the OS, right? The iOS, the Mac OS, all these things. I think that is a lot harder to replace as compared to anything that's on the application layer. But those on the application layer, I think those are the highest profit margin if it is executed well. That's why Meta, I think for those investors who invested since, let's say, 5-10 years ago, right? They have a huge run up, because this is a segment that is very profitable. It's just that for me, I have some skeptics in terms of the risk side. So that's why I don't have Meta at this moment. I sold at a loss, by the way. So that was like few years back already. So some history there. Okay, let's go back to this first question. So I've answered these questions, right? So for now, no plan. I don't, I don't manage my portfolio actively. It's mainly buy and hold. So for Nvidia, I'll just hold for now, and likely just hold for the remaining of the year. So no plan at the moment to make any changes. Okay, hi Bunty, can you share your upcoming SG REIT strategy? Thank you. Okay, for this Singapore REITs, right? I think for those who watch Backholder Pod, right? I think we discussed about REITs also about, let's say, 6 months ago. Back then, I was still very bearish on REITs, comparing to a few of my fellow podcaster. I think the other three, they are either neutral or they are a bit like, towards more positive. I'm outright negative back then. The reason I was negative isn't so much about like whether they are badly managed or stuff like that. There's just one bare thesis back then for me. That is the interest rate cost is a lot higher now. So for those who look at like dividends, and then you look at the the financial statements of all these REITs, right? You know that the business model is very simple. All these REITs, they hold all these physical assets, right? Could be office building, could be malls, could be logistic assets, and then they rent out all these assets. They get a revenue, and then because their ownership, right? If you look at their balance sheets, right, it's not all funded by shareholders. They also took up some debt. So the debt ratio, I mean, it vary by REITs, but it could be between like 20 to 40%. These are the normal level of debts on their balance sheet. So if you look at few years back, right, of course, all these REITs, they are profiting a lot from the debt, because the cost of financing was very low, and then their the dividend that they get versus the assets, right, or the rental yield is higher than the cost of debt. So they earn the spread between. So that's good. In fact, REITs has done very well because of all this leverage effect over the past decade. But since interest rate went up, right, and the effect is not like immediate, because all these REITs, right, in terms of their financing, it's not like they are borrowing short term. So the Fed increase the rates, then now immediately they have to pay the higher financing cost, right? So that's not the case. Because when the debt, right, is usually, let's say, between 3 years to 10 years kind of bonds that they issue on the open market. Then basically they staggered the bond issuance so that at any 1 year they only need to refinance a portion of the debt. So right now, interest rate is already like stay high for quite some time. So for any REITs that they continue to refinance, right? So this cost will eat into their income statement. So that's one reason to be concerned about it, because even though, let's say, occupancy is doing okay, the revenue, the rental revenue is doing okay, but now the cost of the interest cost, right, is like it was slowly going up. So I do think that definitely will have some impact to the DPU. But this one, you have to look at it from REITs to REITs. So some REITs that is taking more debt, or the smaller REITs that, let's say, when it comes to the cost of financing, they have to pay higher because they are not as reputable as the big one, right? So all these smaller REITs, you need to pay attention to this part, the interest cost, and what's the impact of this interest cost to the DPU. That's why I was bearish back then. But now what has changed, right? Actually, when it comes to when looking at risk, I would say maybe two things. The first thing is that I think this interest rate cycle, right, at some point it will go down, because it's already stay high for some time, and we already see some cooling in economy. If it's not this year, maybe next year at some point it will come down, right? So as it come down, any bear thesis that I just mentioned, right, a few minutes ago, it will become the bull thesis already, because now the refinancing or the financing cost will get down, and that the DPU will have some positive impact. Okay, that's one reasons, right? So it's really betting that the interest rate will go down. And the second reason is because, I've shared before, I have some T-bill. Because I think that market is overvalued, I didn't really deploy all my savings into the market. The deployment was a bit slow, especially for this year. So I look at my T-bill, I start to get worried also. Let's say if interest rates start to come down, right, all my T-bill, it will start earning a lower yield. So that's why I'm thinking that maybe it's time for me to add some REITs, so that if interest rates stay high, then okay, my T-bill will just continue to earn like a decent yield, right? But let's say if interest rate really come down, right, at least my REITs will be doing well. So I think that's more like a bit like diversifications. But I don't have any plan to add, make the REITs become like a huge portions of my portfolio. My portfolio is still mainly the IBKR portfolio that I just shared on the screen just now. So those are my portfolio. So okay, come back to these questions about my strategy, right? Actually, there isn't so much about strategy. If I'm going to buy, right, I'll just focus on the big one. Those the largest names. So you can look it up by market cap. So I'll just stay, like at the safer one. Although let's say their yield is like lower compared to the smaller one, right? But you're looking at the dividend yield or right now, I think it isn't that hard to get something between, let's say, 5 to 6%. So this is still much like it's quite still more decent as compared to the T-bill yield, right? So that's one thing. And secondly, let's say if yield really come down, I think REITs will benefit now. So that's the my thought process when it comes to REITs. Exposure wise, I'll take my time to really get into this REITs now, because if you look at the chart, right, it's still going downtrend. So I think whenever something is going downtrend, right, you can take your time. Don't need to rush in, especially if you don't have any exposure. For those who already exposure, I think they are just close eyes, just receive dividends, decent dividends. So I think that's the strategy for dividend investor. Also, at some point, right, I do think that once we are closer to retirement, it's good to have a portfolio that is like income based. So you just have to do nothing and you receive some dividends, right? So I think that's the like a bit of preparation for retirement, but my retirement isn't coming so soon. So that's something like the plan for the next the 10 years later, stuff like that. So that's the comment on Singapore REITs. Okay, let's say if you are tuning in live, right, you have any questions, just leave your comment at the comment sections. So I'll look at that. I'll of course prioritize the chat instead of going through Slido. But if I don't see any chat, I'll just continue with the Slido, because I think we have quite a number of questions here. Okay, just say hi if you just tune in live in the comment sections. All right, next one. Moving forward along this AI path and improvement, do you think real robots are is a possibility within 3 to 5 years? If so, do you think Tesla is the best bet? Okay, on the robots, right? I think you are referring to the humanoid robots, because if there are, like I would say, the ones that is currently running, the robots, right? The let's call it, like, let's say car factories, right? You look at, there's already all these robot arms operating, right? This is nothing new. This has been operating for years. So when you speak about robots, I think if you look at, let's say, semicon productions, right? Manufacturing, right? All these things, you can't expect human doing all this, manufacturing using their hands, right? So definitely those are robotics. So those are nothing new. Those are already in operations. But when I read these questions, I think you're referring to the humanoid robot. And humanoid robot, I would say, is still very, very new. Like even for, like Tesla, which they tend to announce first, then only they start with the, the developments. And by the time any products that get rolled out to the consumers, right, it will be years later, right? So even Tesla announcement that was, few years back, just like, I think 2 years back. So it isn't that long ago. So I would say that for humanoid robot, it is still very, very early. To the extent, I would say, let's say 3 years, right? I don't expect any like a big changes compared to now. If you just having a short time period of 3 years. I think for humanoid robot, right, you need to look ahead, for example, like 5 to 10 years to see things that's tangible. Maybe you are visualizing all these humanoid robot walking on the street, right? I think this is not happening within 3 years' time. I think it's mainly is because this area is very, very new. But now looking at, like if you pay attention to NVIDIA announcement, right? So there's a lot more effort when it comes to humanoid robot, and Tesla also spending a lot of R&D, a lot of efforts in this area. So definitely this is coming, but it is coming, like, it's still very new, coming very slow, and so I would say it will take time. But robot in general, I think this is something that is like it will be the future. So definitely, I think their goal is to have all these robot taking up more human physical labors. So I think Elon also mentioned this, right? He said that actually it's not that difficult to design something that can walk on the street. I think this is not that difficult. But if you say it has to be useful, but useful is not just some demo doing some gimmick stuff. I think that's not considered as useful. But useful, I mean, it can really like replace some human labor. I think that's the bar, right? I think that one it's not that easy, because human, especially with the finger, right, actually is very flexible. But when it comes to robot, the degree of freedom, all these things, I think it isn't that easy. Then you still need to think about, like, let's say if they're going to roll out, thousands and 10,000s of all these human robot, right? You need to think about the productions, the scale manufacturing, all these things. So there's still long road ahead now. So it's not going to come that soon. But if you like this area, you pay attention to, like Tesla announcement. Sometimes they have some video showing the progress. I think it's still quite cool to look at that. It's just that you need to be very patient if you are very, like, hype up about all these robotic things. Yeah, all this will happen. It's just that it's not going to happen that soon. So that's my view on this. On the questions, do I think that Tesla is the best bet? So I'll break this to two parts, okay? The first part is that designing all these robots, do I think that Tesla is the best? Actually, I don't think so. I think they are one of the best, but they are not like the top best. Because as you know, different companies, like there's still quite a number of all these AI startup companies that doing all these things, right? I think they are, equally good. Or I would rather say they are all still early in the journey. You can't tell whether Tesla will be the best. So I think they are still competing. They are still at the starting point, okay? But what is, like, if you compare Tesla versus other startups, right? I think one key, and this key advantage is very, very big one, is the scale manufacturing. Because they already have the car factories, right? They know how to manufacture things. Whereas for all these startups, right, they don't have all these factories running, right? So even if the other competitors are as good as Tesla, at the R&D phase, right? The moment these things roll out to the productions, right, you can see that Tesla will be miles ahead now. So I think that's the key advantage that Tesla has that I don't see any other companies is able to compete. So you can think of Tesla's, which is I think quite similar to Apple in terms of the advantage, because Tesla now they spend time on all this R&D of the robot, right? But the key strength is actually on their factory, the hardware side. So they have their hardware, they have their software when it comes to all this FSD or FSD for the Optimus, right? So when they put all these things together, they will have a very good hardware software integration. So when it comes to the product, right, I think no other companies can beat Tesla when it comes to entire package. So that's why I would say, if you ask me whether this is the best bet, yes, I think it is. If you think about the production, but if you just think about like, okay, just R&D phase, which one is the best? I think other companies, maybe there are companies that are doing even better. I won't be surprised on that now. It's very similar to FSD situations, right? If you compare FSD versus other companies that are doing autonomous driving, right? FSD, some argue that it's not even better. That they are worse than the others. But if you ask, like, have you tested about, let's say, AutoX or Waymo autonomous driving, right? Actually, no, right? Because they can't scale. But for Tesla, everything that they have done on the FSD, they just roll out to the fleet, right? So immediately, all the users, they can try out themselves already. So the roll out to the consumers, the scale manufacturing, I think this is definitely the advantage that no other company has. All right. Okay, comment from Chiong. Tesla a buy now, seems like bottom humanoid and robotaxi growth. I think Tesla, for me, I would say that if you look at financial isn't that good. Mainly it's because they have been cutting prices. So you cut the price, your profit margin comes down. If your profit margin comes down, means that you look at the profit, it's not pretty, right? So that's one thing. You look at the free cash flow, it's not pretty. So with that kind of financials, it's very hard to attract institutional investor to invest. But I think if you compare institutional investor versus the retail investor, right, or investors that understand the companies, not just from financial perspective, but on qualitative basis, right? I think it's a good buy, right? Because I'm quite bullish about this company since like years back, right? But looking at the price, you look at the price, it's like isn't pretty. There's reason, right? So the reason is because financial, and the financial is tagged to the pricing. And if you ask me whether I'm expecting that this price cut has stabilized or whether they can increase the price, actually I don't think so. I think it's quite difficult at this moment because interest rate is high. This entire car shortage that push up the car price, right? Now with hindsight, we can see that, it's just like one-off thing, which is about 2000, 2001 kind of things. And now because manufacturing of other cars, right, is doing okay, so there's no shortage of supply. And if Tesla want to continue to grow, they have no choice but to lower the price, right? This is just economy 101. So from that angle, I would say that you need to be patient if you think that the financial will improve. I don't think, I'm actually not that bullish in terms of the financials. But in terms of the strategy, right, in terms of like what are they going to roll out, in terms of the culture, in terms of their business modes, their view when it comes to the production, the manufacturing, I think all these things, they're doing all the right things, and all these right things that I just mentioned, right? This is the reason I invested in this company. I think that manufacturing wise, they are better than other automakers. And let's say if you just try to take on the hat as a car buyer, right? You can just go to visit like a Toyota or Honda showroom and do a test drive on other cars. I think if you are familiar with Tesla car, you can immediately spot that for all these other brands, right, the software and hardware sometimes is a bit like out of sync one, because it's actually all these other brands, how the cars is built is like they are modular. So the car companies, they just they just manufacture the car, but when it comes to the electronic, they order from other suppliers and they piece together. So sometimes you think that you can sense that they are out of sync. You just don't have a good, like a user experience. Whereas for Tesla, like, because they control all the software, the hardware, everything is done in-house. So definitely they have, the Apple kind of vibes, right, where they control all this ecosystem, they control the software, hardware integrations. So the user experience, especially those related to software side, right, is just a lot better. So I think this one, as more and more digital, more and more tech, more and more, you can call it gimmicks, right? All these are put into the car. I think these software hardware integration things, right, it will become more apparent and become more obvious. And this is always a selling point. And then of course the driving, experience is so much better for Tesla. I think last time you can still complain about the charging network is people are worrying about charging, and then that's why there are reason to stay away. But now with the charging network expanding so fast, right, I think the reason not to own a Tesla become like there's no more reasons really. And the other things is about the pricing. Last time EV was very expensive. Now after all the price cut, right, I think it's getting a lot more affordable now. So I think the trend is really towards EV lah. But whether it is like like the S curve, then all the ICE cars just die down in 5 years' time. Maybe not so. Maybe it will take some time. But the trend, right, the directions, you have to get the direction right. Because if you don't get the direction right, you go and buy other automakers that don't focus on EV. And let's say 10, 15 years later, EV is really taking over the entire auto market, right? Then for those investors that own all this Ford or Toyota, then all the best to your investments. So that's what I'm thinking when looking at Tesla. Okay, I've answered these questions. Next one. When the Chinese see those presentations by Jensen, do you think China able to catch up? If no, is attacking Taiwan and TSMC the best options if they are forced? Actually, when I look at this, right, I think when you ask these questions, I think you are reading too much into Western media, because Western media, they always like to portray China as like aggressive. If they're not happy, they're going to attack Taiwan and so on. I don't think that's the reality, because like attacking, invading a region, right? This is not something that you want to do it lightly. Okay, or even if you want to do it, you are not you have to plan all these things, like 10, 15 years. You're not going to be, just because of like, like AI, I need to win AI, but I cannot win, so I invade Taiwan. I don't think it's as simple as that. It's a lot more complicated, a lot more complex when it comes to these issues, okay? The second thing about like presentation by Jensen, I think right now, right, it's quite clear, not just me, I think it's quite clear among markets. You just look at Nvidia share price, you also know that it's quite clear when it comes to AI, you need all this GPU, okay? When it comes to GPU, all this AI tech, you know that Nvidia is the best one. And again, if you look at the application side, right, of course, all these AI things will be applied when it comes to the military use, okay? This is also true. So if you compare, China versus US, right? Of course, they compete when it comes to military forces, right? So definitely this is something that's concerning. For example, if really China have to go to war with US, right? And if US have all this AI capability that China doesn't have, right? So it will become an issue, right? So definitely they are competing, okay? But competing, is that means that they have to start, invading each other? I don't think so, okay? But what I think China will do is that they now realize that when it comes to all this, GPU, when it comes to semicon engineering, they are behind, okay? They are behind US, because the moment US block Huawei from accessing, let's say like TSMC, right? So immediately they take a hit, right? So from China perspective, they will look at their semicon, like the entire value chain, right? They notice that, okay, maybe the manufacturing side, they are lagging behind, but they have SMIC. Maybe it's a few years behind TSMC, but they are working hard, right, to actually push their engineering. Then secondly, EUV. Now basically US is also controlling EUV, although EUV is a Netherlands company, right? So, but on China side, they also have companies these try to like manufacturing all these lithography machines. Although yes, EUV, they don't have capability right now, but is this something that they can't create given, let's say, 5-10 years down the road? I have no idea. I actually try to search on this. There isn't so much information on this, but I think this is something that they are working on, and they are still trying to compete. Okay, so this rivalry between US and China, I think it will continue over the coming years. But whether it will lead to some sort of like invasions, I actually don't think so, because even if China want to unite with Taiwan, I don't think doing it in the forceful way is the right way, because there will be so much criticism, and they are basically cut off their relationship with US and the Western countries altogether if they are really invading Taiwan. So the cost is just too high. So even they want to unite with Taiwan, I think they have to do it in the right way, which is not through invasions. So that's my expectations or my projections when it comes to these issues here. Again, not geopolitical expert in these topics, right? But through what I read, I think there's a lot of misunderstanding when it comes to China's planning or basically what they want to do. I think US or Western media really paint a picture that's very misleading. All right, let's move on. If China attacks Taiwan, TSMC will be down, but is it correct that Intel and Samsung will be able to take over, just that their cost is higher? Yes, TSMC will be down because they will lose access to a lot of stuff, including the machinery, all the input coming from Japan and so on. So the down part, I think this is already communicated by TSMC. But whether Intel and Samsung is able to take over, I think yes. Maybe it's just like few years lag when it comes to the technology. So it's not something, whatever TSMC is able to do, right? Maybe Samsung and Intel, they aren't able to do now. But it's not that something that they cannot do, given enough time and investment on the R&D, right? So they are competing, and maybe they are just like 1 year to 3 years behind TSMC. So I don't think there's anything that Intel and Samsung cannot do. So that's my view on this. Is it correct that China cannot buy NVIDIA advanced chips, but they can rent them via the cloud with the Azure, Oracle, etc., and do their AI tasks? Yes, I think you are right that China cannot buy NVIDIA because it is really blocked by US government. So they cannot buy certain chips. But whether they can, use the cloud to do whatever they want to do, I think this one is, you can't just answer this with like one line, because essentially you need to ask like, what is the use? Okay, if the use is really just for, let's say, like powering consumer stuff like TikTok, for example, right, the recommendation engine and so on, I think all this stuff, as long as the business or the operations, you can shift it to, let's say, like Singapore, of course you can use Azure, Oracle, and so on, right? So I think stuff that is not, let's say, military related, I think there's no problem for them to use Azure, Oracle, and so on, because I mean, these are the normal stuff. This is just business, right? But if you ask, like, let's say, imagine, right? Let's say, because the US side, right, they are most concerned with China buying all these advanced chips for their military. And from China perspective, they want to buy all these chips. They are not going to, they house all these chips and they do their AI stuff or their R&D stuff on in-house chips, right? That's their plan. If it is for military usage, I don't think they will just use Azure and Oracle, because that basically means that you are sending your data to Western companies, and basically all these Western companies, they know your military capability, right? So that's why I think if they simply can't use Azure, Oracle. That's what I thought when it comes to all this sensitive military stuff. But when it comes to the normal things, the consumer stuff, I think they should be able to use Azure, Oracle. No, I don't think that's an issue. But again, I'm not expert in all these topics. I just thinking of it, right? Like you have to break down like the usage then from the usage, the usage specific kind of applications, then from there you think of whether they can access or not. That's my thought when it comes to these questions. As of now, all companies that are into AI or wanting to incorporate AI, are they still mostly at training or inference stage? I mean, across all industries. Okay, so again, this is a bit like, like you have to go a bit deeper when it comes to, you have to break down basically. So if you talk about like the training, like the training of the large language model, the LLM, right? I think it's just a handful of companies that are very prominent when it comes to this. For example, like OpenAI, the Cloud AI, and the Cloud, CLAUDE, okay? Then maybe Llama, all these models. These are, the companies. Llama basically is done by Meta, by the way. So there's just a handful of companies doing all this large language model, foundations model training. So this is like training, right? I think there are many companies that are doing inference. By inference, what it means is that they are doing some cool applications, and then they just use the API to connect to this foundation model, and then they are doing cool stuff on the applications layer. So they are essentially using all this big LLM that's already available, and just their usage, right, or their product or services, right, is mainly providing inferencing. So I think that's two different parts, and there are two different group of companies doing all these different things. And of course, there's also overlapping between the training and inference, because there's this what they call the RAG, the retrieval augmented. Is what I forgot the names. So basically these are companies that are taking some sort of foundation model, and then they are using their own companies to do some fine tuning and so on. So it is a mixture between the training and inferencing, and they are doing like some sort of mix between these two. So I think that's also somewhat different compared to like just application layer inferencing and the training of the foundation models. So I think just to keep it simple, right, is that there are thousands of companies doing all sorts of different things. I can't really comment like in a too generic way, because it will be totally misleading and not too useful. So I would say there's a lot of experimental stuff going on at the moment. The question is whether all these experiments will turn into like the products that everyone use on a daily basis, right? So that's still yet to come. But yes, I think this area is still very new, and I'm quite excited. So I think that's it. I don't know how to explain too much on this. Maybe we need to do some preparing some slides, and then to present it in a more detailed way. When a company wants to incorporate AI in their daily ops, do they do it themselves via IT department, or they hire outside parties to do? I think there are different ways to do it. At this moment, you can't expect IT department to be the one that's doing all these innovations. I think most of these innovations, right, is really either driven in-house. For example, let's say your companies, they have all this piles of data. They just want to drive some insights from this data, right? You can't expect IT department to say, oh, let's do this, right? Because IT department, they don't really have incentive to understand what each of these employees trying to do, and then just say, oh, why not we do this innovative stuff, right? I think IT department, sadly, right, they are not that proactive usually, okay? It's usually the people who use all these technologies are interested to bring in new technology, okay? And then the second question is, how can they bring in all these new technologies? That's the interesting part, right? Because sometimes it could be as simple as, why not we just use, like ChatGPT to do all these things, right? Because I have all this data, I just want a summary. If we have access to ChatGPT, we just throw things in, and then spit out a summary. Is useful for my work. It make me more, productive. Why not we just, subscribe to the license? It could be as simple as that, right? Or it could be more complicated, whereby you need to, procure a big, like API to the API to OpenAI, and then from there build this API into your current product, your current apps, right? Then it will be a lot more complicated. Okay, let's say the companies is like they have a big tech or digital or engineering teams, right? They can do it in-house. If they don't have all these things, right, there's always consultant that can help out. It's also possible, or they can engage a developer from the outside, right? It's also possible. So it really depends on the capabilities of the company, whether they're able to do it themselves or not. So it really depends on company by companies. But I'll say there's still many companies that don't have all this capability. At this moment, maybe they are doing nothing. they are slow to react on this, because we are, like this channel or our community, there are quite a number of us that is very, we pay a lot of attention to all these digital tech adoptions and stuff, right? I would say we are niche, we are the nerds. Actually, there are still many companies that still don't know about ChatGPT. They don't care about it. They know that this will come sometime in the future. It's just that they are not taking any initiatives at the moment. I think there are still huge number of companies that belong to this category. They're just waiting for the super app that come at some point. So they are slow to react. So that's my view. Hello. Congrats to those who bought Nvidia and long hold. Yeah, our billionaire achiever. Nice to see you here. Yeah, congrats. I know you also have Nvidia investment, right? Congrats to you too. Yay. All right. Moving forward to next questions. Nvidia transcript. For every $1 spent on Nvidia AI infra, cloud providers have an opportunity to earn $5 in GPU instant hosting revenue over 4 years. Is it correct to say that Nvidia high sales of GPU will lead to high cloud revenue, which means cloud over the next 5 years should see increasing revenue? Okay, I think, right, when I read this statement, this $1 spent, you can have $5 GPU instance, right? I think this one maybe is a bit overstated. The reason is because if you compare the GPU or the infra spend, right, versus the amount that you can earn by renting out this AI infra, right, you are looking at the rental rate as of today. But you need to remember that all this AI infra, how much you can rent out, right, basically the rental yield, right, is also dropping. Because, like, for example, like the ChatGPT, the 4.0 model, right, after, let's say, 9 months or so, they can make it faster, cheaper, better. So they're actually lowering the cost. They are able to lowering the cost is also because all this rental or the cost to run all this AI infra, right, is dropping. It's dropping also because all this AI infra, every generation that come up is even more powerful, right? So that's why the compute power, the GPU compute power, it will reduce over time. So the $5 I think is assuming like a flat things, but the truth is that it will become lower and lower. So I think that's a bit overstated. I think I want to clarify on that. And then on the second questions on whether the cloud revenue will increase or not, I think there's no doubt it will increase, because if you look at all these cloud, right, for example Azure, AWS, they are spending tons of capex now just to buy all this AI infra. And it's not a bet from their side, because they can actually see the demand, right? So what happens is that they see the demand is there, they just buy all these chips, they put it inside their cloud, and then they rent it out. Then they just profit from it. It's a bit like REIT business model. You see that rental yield is high, you just buy all these buildings and then you just rent out your buildings, right? So definitely you can see that the rental revenue will increase over the coming years as they buy more and more all this AI infra or these AI chips. So I think that's a simple question. So definitely it will increase. The question is always that, okay, if you compare the future rental revenue compared to today's capex, right, or the amount they spend now to acquire all this chip, do they get a good ROI from all this investment? Or would the demand actually come down, let's say if they don't find any good usage? I think there's still some risk factor in that. It's not a risk-free kind of investment. And the ROI, whether it's good ROI or low ROI, it also depends on the rental rental that you can get from all this AI, right? And that one will tag to the AI usage. So I think all these are linked, one linked to each another. And you can reason through this. The harder part is that we actually don't know. We don't know like 3 years, 5 years down the road, how much AI compute that we all need on an aggregate basis. And this one, it depends on the AI, the applications, right? How good is the applications? So I think there's still some uncertainty there. It's just that the roadmap is quite clear. I think even if you don't see anything useful over the 1 year, maybe you'll come at the second year or third year. So it's a timing issues, not so much about the direction issues. All right, done these 2 questions. Inside your heart, which company is the tech sector offer something that is now underrated but is very useful in the near future, so we can do some reading? Okay, by the way, I know that all these questions, right, they are directing at YCX, and I checked with YCX whether he's able to join this morning. He said no. So let's say I'm answering these questions, not YCX, right? So let's say if you still want YCX to answer, maybe next time Slido, maybe you just post again, then maybe you get the answer from him. But as for, let's say if I am to answering these questions, right, which company in tech sector offers something that is now underrated? Yeah, I think because maybe it's also, I'm spending quite some time to understand, let's say, I just watched the WWDC from Apple, right? And then when I look at the current AI trend, right, I think that things that is underrated, right, is still the user experience. Because user experience is not something that you sit idly, you can think like, oh, like this, the user experience will be good. Actually, you can't really describe it. It's always after someone invents something, okay, then you use it, then you know whether the user experience is good or bad. Okay, so it's quite simple to know. Once the things is there, right, you use it, whether you feel that, wow, every time I use that I feel pain, or every time you use it you feel seamless, right? So I think all this, you need the working prototype, or you need the experimental product, or you need the real products, then you know whether the user experience is good or bad. Okay, I think this user experience thing is really still underrated. Because if you compare, let's say on the smartphones, right, people comparing iPhone versus Android, right, I think the user experience is just better on iPhone. That's because they pay attention to like small stuff that's hard to describe. But if you use it long enough, you know that, yeah, the user experience is just so much better. So now you're just applying all this AI capability, right, in terms of like which kind of AI services or AI capability that, yes, of course, it's using AI. That's what we are looking at. And which company can create services that is having good user experience? Because I think even if you have all this capability, doesn't automatically transfer to good user experience. Because I think good user experience is just, it's a bit like style or taste or how to say, like arts into it. Isn't so much about the capability. So I think it's a bit harder, a bit abstract to describe. But I'm paying attention to different companies to see what they're doing on that now, like providing the best user experience. Yeah, I think for companies like Nvidia, right, because they have their hardware, they have their software. Even you can look at these CUDA platforms, everything's. I think from developer perspective, this is still a user experience things. Because for example, if you want to use like AMD AI chip, right? They don't have good enough library. They don't have good enough platforms. Developers aren't there. User base aren't there. In a way, you can also think of this like, okay, it's hard for AMD to compete with Nvidia because the user experience is not there, right? So that's also one way to read into it. So I think that that's the only thing that I think is I can think of now, like what are underrated, right? Which is the user experience. I don't have any niche things to look at, but I think there's a couple of TikTok videos that I shared in the Telegram group that I think there's this, I don't recall the name, but I think the guy is really like he nailed on in terms of a number of topics related to tech. For example, he mentioned about the the voice and so on. Okay, enough on this. Data center require high power more and more DC, but oil price keep going down. Buffett, however, keep buying Occidental petroleum. Do you think oil will go up or down? Okay, break down these statements, right? Yes, data center require more electricity. This is definitely true. And we all heard that, like companies like Microsoft or other tech companies, they are investing a lot of money into solar, just to make sure that first things is renewable energy. Second thing that's help up with the supply of electricity to power up all these data centers, right? So I think this is definitely the trend. And then oil price, I think very hard to guess the oil, the directions, because there's demand side, there's also the supply side, right? And if you look at oil prices when it move a lot, right, usually it's not on the demand side, because demand is more stable, maybe except for situations like COVID, right? But on the supply side, that's where things can get a bit non-volatile, because it's linked to geopolitics and so on. So I would say very hard to guess. But if you ask me whether I'm worried that we don't have enough electricity to power up all these data center, I don't think so, because as long as the demand is there, people can see that the demand is there, and people can see that the demand is trending upward. Definitely, there will be investment into extracting or come up with more energy to sell to the markets, right? That's how market works. So, and then there's still a lot of effort when it comes to renewable energies, when it comes to nuclear power plant. I think there's more things that they can do to make sure that there's enough supply. So I'm not that concerned when it comes to the supply side now. But when it comes to predicting the direction, like I would say, I don't know how to predict. It's commodity. It's very hard to predict. It's almost like a macro questions. So no idea there. Hi Bunty, do you have any sources what DC is this the data center in China consists of? I don't know what is DC here. All the old Intel chips. I think this is PC. What PC in China consists of, right? Personal computer. All the old Intel chips, or what is inside of them. Yes, I think for China, right? I think if you look at the PC market, right, the Intel chips is still dominant. Actually, if you look at Western market, right, if you look at PC, still, I think Intel chip is still the dominant chip, because the x86 architecture is still the dominant one. It's just that now we have seen that the ARM architectures, right? For example, Apple already moved on to ARM architecture, phase out the Intel chips, and then on the Microsoft or on the Windows side, also you see that all these companies like Qualcomm come up with the AI PC stuff. So those are all running ARM architecture. So I think the best thing about ARM architecture is that is from battery consumption side, is like so much better as compared to Intel chips. So I think they are trying to compete for market share, but for now Intel chips is still the dominant one. So come back to China, I think yes, it's still the Intel chips, and yeah, still mostly I think mostly Intel chips. Maybe they have some local supplier. I don't know. I think. You can ignore that part. I think this is mainly Intel and AMD chips. These two. I don't know if there's any follow-up questions on this. Yeah, let me know if there's any. All right. Buti, do you have any website that shows the ROE or ROIC of a stock for the past 10 years? So at a glance, we can see this company performance. Last time I used this roic.ai. But I think they become a lot more restrictive after they try to do like a freemium model. So I stopped looking at that website. Right now, actually, I don't pay too much attention to like just a single metrics like this. I prefer to look at, for example, like this, right? Just now we talked about the Broadcom, right? I was looking at the trend of revenue. I was looking at the trend of their free cash flow. I prefer to look at things like look at the trend. I don't pay attention to like a single digit number, because just a single digit, it could be like one-off event that caused that, right? So it's very hard to interpret that single numbers. So for me, I'll just like in terms of all these financial metrics, right? I'm using this site called Coifin. I think it's quite useful. I don't pay for this. It's just a free site. You just have to register lah. Okay, it's a freemium model. You can upgrade to get more stuff, but just the free models is already quite good lah. All right. Yep. These questions. Punti, what are your plans for your portfolio as the market continue to edge into higher highs? Keep holding, add more, take profits, or exit all? Okay. Come back to the whole philosophy about this channel and my portfolio, right? It's really invest for the long term. So I would say mainly it's just buy and hold. Okay. That's the 90% of it already. And of course, let's say I have savings, right? So the saving, when it comes to deployment, I deploy a little bit into stock market. I deploy some into, T-bill. I might deploy some into Singapore REITs, like I mentioned in today's session. So those deployment, I mean, like could be small portion into different pockets. But when it comes to the portfolio, right, it's really mainly buy and hold. I don't even do that many trades in a year. And I mentioned a few times that I want to add more into ETF. I think that's my plan. I think that's broadly the broad directions lah. The one that I say no is the take profits. I think this take profits philosophy, this is really a trading things. You buy low, you sell high, you call it a wins. You are a good traders. But I don't see myself as a trader. I think it's too tiring to in out, do this kind of things. Exit all, this is definitely a no. Even if I retire today, I'm not going to exit all. I'll probably just sell a bit just to fund my retirement, right? So exit all at one go is not my way of investing, okay? This too is definitely no. Like if it just continue to get higher and I get a bit uncomfortable, I might just stop, allocating for a while and just add more into T-bills. That I might do. But I'm not going to, just exit just because of I think markets, overvalue. Because I think for those who exit all, right, I think for those, let's say if you look at the market and you watch all these influencer video long enough, right, definitely you will notice that there are, people that think that, oh, market is expensive, I already sell everything. Then after you sell everything, the market go up by another 30%. Then what now, right? So do you want to add, going back in? So it become a big dilemma if you have that kind of situations lah. And then let's say if this thing stretch on for 5 years and 10 years, right? Now market is already up by 100%. How now, right? So I think that's the situations that is very bad, especially if you plan this entire investing as something that is like 10 years, 20 years, 40 years ahead. So you don't want to stuck in a situation where you just exited all and the market just 2x. Then you don't know what to do next. So I think don't do these kind of things like that exit all. You can steal a bit, like holding more cash. I think that's fine. But to me, if in these situations you have some investment, but your stock is 10%, 90% into T-bills, I think it's also quite bad because you're essentially just holding cash, right? So it doesn't work from long-term perspective. Yeah. All right. Bunti, do you consult wife before buying positions? Or do you have an arrangement for how much leeway to have for investment? Well, I think these questions, right? I think this is very, very good questions. Maybe I think I'll post these questions to the backholder pod and we could have a discussion there as well. But I will just do some comment on this for myself. So the answer is no. I don't consult with my wife before I do any investment. The one that I consult with my wife, right? Like I actually force her to give her opinion is when buying the HDB that we are currently staying. Because if I bought a bad unit, right, then I need to listening to the complaint for years. I cannot take that. And she's staying in it, right? So definitely I can't. I definitely need to get her view. I need to get the commitment from her. But when it comes to, let's say, the investment side, right? First thing, she isn't interested to find out what I invest in. She don't know the portfolio. For those of you who are watching my channel, right, you know about my portfolio more as compared to my wife. So she don't give any opinion. Secondly, I invest my own savings. So she has her own saving. She keep her saving. I I of course, like family expenses, I support the family expenses. So she have a credit card. She has my sub credit card, so she can spend my money. But when it comes to investment, right, I invest whatever left after all these family expenses, right. So these are excess saving, so that I put into investment, right. So I don't need to get cleared by her. So I just invest my own money, and that's also because she trusts that I know what I'm doing lah. So she don't come and audit my investment lah. So that's how we operate now. Financially, I think you can say that we are quite independent of each other. Like I don't really like ask her like how she spend her money, but she's quite thrifty lah. And she don't really come and ask how I invest my portfolio. But sometimes we do chat about like certain topics. For example, let's say like Nvidia go up so much. Sometimes I mention to her to make her feel good. I don't know whether she feel good or not. We have some chat like this. It's not like this entire investing topic is totally outside of our discussion. It's not like that. Sometimes we talk about it. It's just that we don't actively talk about it now. Yeah, that's how we operate. Hi Bunty, as someone who are not from finance background, is there any tips on how to start? One source I can think of is Damodaran course. I heard from Chicken and you before. It depends on what kind of like what kind of investor you want to be. So I think if I were to comment on Damodaran's courses, right, it is very academics. So like Chicken also mentioned, right, if you want to have as good exposure as someone who is studying, let's say, business in university, right? Yes, go and watch Damodaran courses. And if you complete his courses on YouTube, right, you are as good as like a business graduates, or even better, I would argue. So that's more towards the academic side. So, but let's say if you just say no, I just want to I have my saving, I just want to do some investment, I just want to have a good understanding. I think you don't have to go into that academics, because academic isn't like that. Say it is bad. It's actually quite good in terms of the understanding of all this business stuff, investing and so on. But the downside of going that path is that academic way is usually a bit dry. Like maybe you watch one video, then second video, then you give up because it's just too dry, right? So I think that's the main downside of going through that route. I think recent years people are watching all these YouTube video. YouTube video is the best. I think especially for those like 10 minutes video, right? Not the one that we have now, like stretch on for 1 to 2 hours, right? For those like 10 minutes, let's say if you are interested with one specific, for example, you heard about ETF investing. You just want to know what is ETF. You just search ETF investing, go YouTube search, and then just watch those like 10 minutes video. I think those are the simplest, easiest way to go through it, because you just spending like 10 minutes watching. Let's say you watch 3 videos, each is about like 10 to 15 minutes, right? You spend 1 year, you just spend 1 hour watching this video. You already have like some surface understanding on any topics that you want to learn. Like you can learn about ETF investing, you can learn about AI, you can learn about, let's say, is Coca-Cola a good investment? What is value investing? These kind of things, you just think about one topic, right? You just spend 1 to 2 hours just to watch all this video, right? You already have some surface understanding. And I think this surface understanding, provided you watch those good video, right? You already have good enough surface understanding already. So to me, that kind of understanding, right, is that there's no excuse to anyone to say, even those surface understanding I don't have, I just don't know how to invest. To me, that's unacceptable, because you just spend some time watching all these video, and those videos are very well made, right? Much better than the one that I have. I don't know how to create video. So with that, it's enough. But that's the surface, right? And for those who are watching my video, I believe you guys are not, the kind of like, oh, I know a bit surface, then enough already. Of course, there are people who say, okay, now I know this topic, I know what is value investing, but I want to know like the more detailed layer, like what the more, like how to say, a better appreciation on like the topics, and I want to go deep down into it. And that's where you cannot find, the moment you want to go deeper into any topics, right? I would say video will not be sufficient for you because I think we mentioned this in prior videos also, because for video, right, uh, the the good part is very interactive. The bad part is that to make it interactive, to make it simple for people to absorb, so that people it will get pushed to more viewers, right? It has to be simple. It cannot go too deep. The moment you get, like, even if it is a very well made video, but the content is very in depth, right? Become very not so easy to absorb, right? Those video get little view. Okay, so that's just the rarity of content creations. So if you just watch like tons of video, you watch like 1,000 hours of video on let's say value investing, right? I would say your understanding on value investing will still be very surface, because there's no like the detailed in-depth kind of things on video. Yeah, very hard to find. So for those in-depth kind of research and understanding on any topics, right, you have to read books. So don't no other place better than books. So that's what I feel. For example, like recently, right, I'm reading this book on SML, right? Last time I did a video on SML, try to understand what is the EV, what is so hard about, like EV machines and so on. I have some like surface understanding. I also watch some YouTube. It's only after I read the book I know like how this company progressed from the inception, right? Like incorporations, like how it came up from Philips company, and then in the early years, what are their challenges? How they compete with Nikon in the early years, how they bought over a US company, the SVG, in order to get access to the US customer like Intel. So all these stories is great stories, and then they describe in details what happening back then. So I think this kind of details, right? Definitely you have to choose books and get some good book recommendations from anyone in our Telegram groups, right? And there are tons of recommendations. So read those. I think that's the best way to learn about like the investing. So I'll segregate, right, these two. Just to recap, there's a surface one, which is the surface understanding on how to learn to invest. Just watch YouTube. And then when you get a bit more advanced, then that's where you graduated into like reading books. I think that's how I will approach it. All right, thanks William for the questions. Chicken is also here. Next time should invite Chicken come join me on live. All right. Next questions. Is Seagate and Western Digital hard disk benefit from recent AI data center booms? I don't know, but if I were to guess, I say no, because these two companies, I think they are mostly into hard disk, right? I don't think all this AI stuff need a lot of all these hard disks. I think when you heard about like all this memory in AI, right, they are referring to the HBM, the high bandwidth memory. And this high bandwidth memory, right, this is not the hard disk memory. This is really the those that soldered on the chip, they are packaged to get together as the chip one, because they need the speed. Okay, so this is the RAM memory, not the hard disk memory. So I think SK Hynix, these are the companies that is doing well. Maybe Samsung at some point. Yeah, those are different type of memory. These two, I would say no. Whether it's a good investment or not, I really have no idea. I've read a bit on this business. Again, back to supply and demand, right? And whether they have modes or not. I think yes, maybe they have some, because at least they have brand mode. Because when it comes to this hard disk business, it's just a handful of companies there, right, that are still surviving. So, but again, I have not much insight to share on these hard disk companies. Punti, do you okay, this one already answer. Punti, are children and investment assets or liability to you? Oh, wow, good questions. I think children is children. Children is family to me. They are not assets. They are not my liabilities. They are my family. So my portfolio rich or not, right? Whether I become rich or poor, right? It depends on the performance of my portfolio. And it depends also on my savings, how much I put my saving into the investment. Okay, that's how rich I am when looking at my net worth. But my life, right? Whether my life is rich or not, right? I would say the big part, right? The dominant part is really my family. And my family consists of my wife, my children, my mother. It's two different things, right? One is we're talking about life here, my overall life, right? And my portfolio or my net worth, right, is a small subset of my life. Maybe it will affect a lot of things. Say, for example, if I'm poor, then maybe on the family side also there are challenges, right? Definitely there's some, link there or connected, they are connected. But I won't see children as assets or liabilities. I can understand because, for example, right, in last time, right, let's say 100 years ago, family tends to have 10 kids because all these kids, right, the moment they are 10 years old, they are helping with the family, they become assets already. So they are productive. But nowadays, people complain that, kids, they have to, you have to feed them, you have to give them educations until they are 20 years old, then they have to join NS, not productive for until they are 25 years. And then once they start working, they have their challenges, they have to, pay mortgages and so on. So they can't really give money to the parents. So in that way, they become forever liabilities, right? So I know that people, the person asking this question is probably looking at this from the financial perspective. I can see the perspective lah. It's just that for me, I think that if you think of children as asset or liability, maybe if you try to argue, there are more pointers to show that they are liabilities. And for those who, analyze it logically like this, right? I would say this group of people, they tend to say, because children is liability, I don't want to have more liability. I just decide not to have children, right? So I can see the perspective. It's just that I think it's a bit sad if we think of it this way, because I think we have to segregate the two. One thing is that, okay, first thing, we have to work, we have to be productive, we have to earn money, we have to support ourselves and the family. I think that's on the financial side, right? And also the other part is that we need to be, have a rich life. And to me, a life that's rich consists of, like my work, because I spend most of my time, not most lah, like quite a big portion of my time doing my, my full-time job, right? The environment, the working environment, and then your hobbies, your family, all these things are all very important, right? It is all, like subset of the entire life, right? And your health. So all are important. And I do see my families as like the big partner. So that's why they are not my asset or my liabilities. I think they are larger than this concept about asset and liabilities. All right. Nvidia AI Factory, how much growth will that be for the next 5 years? Will it compete against existing DC data centers? Is that what it means? Okay, I think this AI factory, right now is still a very abstract concept. Okay, because it is not like a product or specific services. It is more like a way to look at all this AI GPU not as just hardware. So you need to look at it from how to say, zoom up from just looking at the hardware or the software driving it, right? And just look at this GPU and see what are the roles or the function played by all these GPU connected together from these AI things. So when Jensen mentioned about this AI factory, I think what he's trying to say is that now we already have the tools, okay? All these tools, these AI tools, is very, very good at driving insights, okay? So basically, you only need two things, right? One is the compute power. The other thing is your proprietary data, okay? Once you have these two, right, basically combined together is very, very helpful when it comes to making decisions, okay? because you have tons of insights. You don't have to guess. You don't have to rely on your past experience. You literally just looking at the computer. The computer will tell you what you should do, because it's that how good it is, this AI things. So every companies or even countries, right, sovereigns, right, they will have all these factories that spit out insights, right, spit out intelligence, right. So this is what he's trying to bring out. So if you ask like whether it will compete with DC, I would say no, because there are different things. This AI factory itself is powered by all these data center. So the question is like how good can they be, and how many people will need to access to them? How many people or how many companies will need to procure these services? And all these things, right, it will drive the demand and the revenue for Nvidia. I think this is the bull thesis. In terms of growth, I have no idea. Like I said, right, growth we can see up to 1 year, but from the second year up to the 5th year or 10 years, I have no idea. I really have no idea. But from the application side, I really think that this is the new futures. We are not turning back. I don't think this is a hype or this is a one-off things. Directionally, I have no doubt that these AI things will definitely stay. Directionally, it will only get better. Whether the demand will slow down or not, that one hard to say. Okay, how strong is Nvidia edge in enabling their hardware to support customer AI tools? How to answer this question? I'll say they are so good that they are the best. That's the only thing I would say. And I think I mentioned before also, how good are they is really depends on like two things. One is the compute power, and the compute power is tied to all these data center, or tied to all these H100 or H100 chips, right? The GPUs. And then the second thing is how good are they when it comes to the software side, when it comes to the libraries, whereby any software engineers that procure all this hardware, right, they can immediately become productive. So because they are very rich when it comes to all these software libraries, especially when it comes to this AI usage. So this is not just about like powering ChatGPT, right? It's also about the recommender engines and so on. For example, Meta, they bought a lot, right? Because they need to know which video to recommend to you. So all these things is very important. They have their software platform is so rich that it's very hard for the other companies to compete. So I think they are the best. That's where I'll put it that way. But if you ask me, like customer AI tools, it depends on what tools, right? Who is using it, how it's done. You need to be more specific when it comes to this. And I'm not too sure about the NVIDIA, the word edge there, because when you say edge, you are talking about the modes, right? Modes, I will just break down like I said. It's about the hardware plus the software things. Yeah. If you have more specific questions, I'll try to get a bit more details. But again, I'm not software engineer, so I also read all this and try to explain in a layman terms. All right, what is Bunti net worth including CPF and property after loan? Net worth, I think the largest part is definitely the portfolio, the IBKR portfolio. I mean, for those who have watched until this point, right, I don't mind to share a bit more. Yeah, profit, not profit. The portfolio already ran up quite high now. It's 700 plus K based on today's portfolio. This one is the largest component already. Then secondly, CPF, I mentioned that I already hit my FRS. So I think these two added together is like, we're talking about like 1 million. So property actually is the smallest one, because I'm not staying at property that is expensive. I bought it at like 300 plus K, and then from that 300 plus K still have the mortgage, right? So the equity portions is much smaller. So just count the stock portfolio plus the CPF is already my net worth already. So for those who want to capo, I know you guys like to capo all these things. If I create a video, 2 minutes video, show my net worth, this is how much net worth I have. Wow, I think definitely view will be higher than this kind of like 2 hours video. All right, next one. What's up with seatrium? Can recover? I actually don't know what is this seatrium about. I will just skip these questions. So for those who can comment this, maybe you can put in the comment sections or join our Telegram group and can have a discussion here. So I'll skip this. Puti, which industry do you think will perform well over the next 5 years? Increasing revenue every year, not price. I can only think e-commerce, cloud. Any others you can? I think, yes, I do agree with you, cloud and e-commerce. I think definitely these are the obvious one. Cloud is mainly because it's tied to the usage, right? And usage is usually, they go up smoothly. Yeah, if you really pay attention to like steadily increase revenue, right? I will not say what to pick. I'll just comment on what to avoid. Because like what are the stuff that's volatile, right? You want to avoid, things that is tied to commodities. Anything that's commodity, you just need to take it out. Other than commodities, right? Then I think there are actually quite a number of sectors that you will see, at least they go up according to the GDP. So, but I don't want to mention industry here because, I don't do my research based on industry by industry. But if I just look at my portfolio, right, like companies that I own, right, businesses like Amazon going up one, so because of their e-commerce and their cloud, right, and then Microsoft is also steadily increasing because they have a huge revenues coming from all these subscriptions, right? Anything that's to do with subscription, I would say it's a lot more stable. So that's one I will call out. And then of course those that are riding on this AI wave, right? Also that you will see a huge growth. Yeah, and I will call out another one, which is Apple. For those who tune into the WWDC, right, you notice that for devices that can use this Apple intelligence, right, it's only iPhone 15 Pro onwards, and for iPad is only those using M1 and above. What it means is that if you project 1 year to 3 years ahead, right, there will be tons of upgrading for iPhones. I think Apple will go through another wave. So for those who are like paying attention, right? Yes, Apple is something that I want to call out for. That's it. Next one from Web. Hi Bunty, opinions on share buyback by Nvidia. Last quarter repurchased 9.9 million shares, about 8 billions or 800 per share, offsetting dilution from SBC. Yes, I think I agree with you in terms of the share buyback. Let me just read out the second comment. Given the SBC and repurchases, if done at a premium, both are costs to the company. What are your thoughts on these capital allocations? Thanks. All right. I do agree with you for companies like Nvidia, right? Actually, the share buyback, you look at the 8 billions, right? First things is just a tiny proportions as compared to the market cap. Okay, so it's not that meaningful. Secondly, it's really just to offset the stock-based compensations. So you can almost think of like this amount, right? 8 billions, right? Is expenses. It's expenses paid to the employees, and they haven't really done any share buyback. You can think of it that way. Okay, so then next question is about like what's my view when it comes to this share buyback, right? I would say that there are certain things on Nvidia that may not be applicable to another companies that's doing share buyback. Okay, first thing, yes, if you look at forward PE, yes, it looks expensive. So whenever companies do share buyback, when the share price is high, right? Definitely that is stupid, right? So I do think it doesn't make much sense to do share buyback for Nvidia. So that's one thing. Secondly, I think that for Nvidia, right, although the price or the valuations looks quite cost expensive, if you're looking at from forward PE perspective, but I think the companies, they don't mind to do buyback also. They know that whatever revenue and free cash flow that they are generating now, if you extrapolate forwards, it's likely to be higher. So they do see that the strong demands when it comes to their revenue and when it comes to free cash flow. If these things continue, right, definitely the market cap will continue to go up, right? So if anyway they are going to do a share buyback, should they do it now or should they do it like a few years down the road? Okay, so from that angle, I would say that that's a good argument to say that although forward PE looks high today, but it still makes sense to do some share buyback. So that's another things that I want to share. Then thirdly, speaking about these capital allocations, right? So what can the company do with the free cash flow that they generate, right? I don't think Nvidia has a lot of debt. That's one thing. So if they have debt, maybe just pay off the debt, right? That's the obvious one. Secondly, can they actually, like use the money to acquire another companies? Actually, they try to acquire ARMs, right? Which if it is approved, I think that's good for Nvidia. But for all this big tech, right? This is about related to regulatory stuff. They are just not allowed to do acquisitions. So if you can't acquire another companies, what can you do, right? So it's very hard for them to acquire another companies. So if you can't acquire, then you don't have debt to pay off. You either pay dividends or you do share buyback, right? So to return the money to shareholders. So that's the situations that NVIDIA is facing. I know that they have been setting up some startup or investing in startups, and then maybe I think there's one, I forgot the names already. That startup is basically buying NVIDIA chips and then rent it out, right? It's a cloud AI startup. So I think that's maybe one way to utilize the cash they have. But apart from that, if they are not doing share buyback and not paying up off the debt, I really don't know. Like it will become a situation similar to Berkshire, where the cash just keep on building up, right? So if you build out to the extent that that's very big and the market cap is even bigger, then they also start with their capital, so it become not capital efficient. So I think this is the dilemma that they are facing now. But if you ask me, I would rather they keep some cash now, because we all know that at some point maybe there will be some slowdown in terms of their revenue, and then if there's any crashes in the future, I hope that they can do more buyback when the share price is crashing, right? So that's what I thought now, but I really don't know whether, because they also did share buyback, let's say a few years ago, and that was also done at a high PE, okay? But if you now with hindsight looking at that decisions, right, it's really genius, because maybe when they did that, right, their market cap could be at 300 billion. Now it's already 10x. If you compare share buyback back then versus now, of course doing share buyback back then is a lot better, right? So I don't know whether they can continue to run out for another 2x from today's price, right? It could be, I don't know. So it could be a genius move doing the share buyback now. Okay, so you can see, right, like all this share buyback is also similar to our thought process when coming to whether we should invest in the company now or not. So I think there's some similarities there. It's just that they have more things to consider, given that they can always acquire another companies if it is allowed by the regulators now. So those are other aspects that we might not have as retail investors. Okay, thanks for your questions. Need to move a bit fast. I think the questions still quite a few more questions to go. I think this is asking web, right? I see. You can look and advise if Monster Beverage, right? MNST today is like when Buffett is buying Coca-Cola many years back. Similar growth, brand distribution, and buybacks. I think this is not questions for me. I don't have a view on this as well. Web, you do reading whole day, is it on computer or book? How you prevent eyes from getting tired? I think this is also asking web. I think web, if you are watching this, or maybe you can comment on Telegram group. Okay, for me, these questions I think I answered before. It's always Kindle. It's the best devices to read books. What are your top 2 investment themes for the second half of the year? For me, yeah, for me, I don't know. I think Nvidia already ran up so much. It's hard for me to keep on commenting on that. I'll give it a pass on that. I would say Apple, just for the Apple intelligence and just for the iPhone's upgrade cycles. Okay, you can mark today's date. I'll mention Apple here. From amongst the beaten down themes or sectors, what will your top contrarian pick be? Okay, I know some people, they call themselves as a contrarian investor. They like to pick companies that's beaten down, right? Don't ask me these questions. I'm not a contrarian investor. I go along with the market. So, yeah, I just mentioned. I don't have themes to recommend. I would just say Apple just because of the iPhone upgrade cycles. Nvidia for me is a whole. I don't know. Tesla, yes, maybe a bit beaten down. I won't call up at this point. Yeah, that's my view lah. Hi, both in your models, do you depreciate R&D costs given that Nvidia R&D is really not opex but more like capex for future growth? Actually, I don't analyze financial statement to that kind of details. I try to keep it very, very simple. For me, right, Nvidia, just two things driving it. First thing is their revenue growth, okay? Top line growth, that's one. Second thing is the margin. And margin, it really depends on the pricing of the GPU. If the pricings continue to be, like high and companies still fight for the GPU, of course, they will have a good margin. But the moment all these companies, all these big buyers, right, they say, oh, I have enough GPU now, I don't need to buy. You can sell it to your other customer. The moment that picture come up, right, of course, they have to adjust their pricing. And the moment they adjust it, the margin will come down. So only these two numbers that I care about, okay? All these details, it's not that they are not important. It's just that the variations when it comes to the top line growth and also the margin, right? These two, right? If you have such a big swing to the entire financial statements, that all these small things R&D to me is just noise. It isn't that important to me. So I will focus on what is important. Then if you ask me like R&D costs, I get the point that you're saying that all these R&D, right, they are not really costs, but it's like just capex and it will translate to growth in the future. I get that point. It's just that when I'm looking at the financials, right, because I'm looking at free cash flow, okay? So when I look at free cash flow, doesn't matter it is R&D or even if it is for capex, right, I'll just say I have to minus this out. Because this is not free cash flow. The company, anyway, they need to spend on R&D. There's no way for them to escape this. There's no way for them to escape the capex. I have to deduct out. So I just look at the free cash flow. Okay. So for Nvidia, I think this way is the simplest way to look at it. Okay. You don't have to add it back and so on. In what kind of situations you need to do this kind of adjustment, I think is for those company that is still, if you look at their earnings, is negative. Okay, so there are companies like this, especially the smaller or startup companies, right? Because you look at the earnings negative, then you say, why should I invest in companies that have negative earnings, right? Or negative free cash flow, right? So then you need to look into more details, because definitely there are, like smaller companies that is like they are profitable, but the moment you exclude out the you look at the capex, after the capex, their free cash flow is negative because they're spending so much on capex, right? Amazon used to be like this years ago, okay, but not now. But there are companies like that, and there are companies that are, if they stop R&D, they can be profitable, but they continue to spend a lot of R&D because they know that they are competing in a market that could be small now but will be big in the future, right? So it makes sense to spend R&D for the future growth, but because of they spend on R&D, they become not profitable. So you want to add back the R&D, and then just to look at the companies, just the earnings before R&D to see that whether this company is already profitable or not. So for those companies, it makes sense to this kind of adjustment to have a sense. But for me, because if you say you apply these kind of things on Nvidia, I don't think it makes sense to spend the effort. Just looking at the free cash flow. That's the easiest way to analyze. So that's my view on this. Morning, Bunty. You have soft copy of I Will Teach You to Be Rich mentioned in the group. At this age, still worry of money? Everything have to try. Take care. What's the questions here? I a bit struggle to what to respond. Okay, I will say that I haven't read this book. I Will Teach You to Be Rich. I heard about it. I think I've watched some YouTube presentations. So I roughly know the key point of the book. But let's say if you can't find the book in the group, I can get it for you. Just mention in the group. But the second part, at this stage, still worry of money, everything have to try. Don't know how to respond. Are you talking about your age? Like you are at a senior age or not? I'm not too sure about that. I don't want to make assumptions. Yeah. If you are referring to me at my age, am I still worried of money? As long as I'm working, I'm not that worried. Yeah, portfolio doing well, not too worried about it also. Okay lah, you asked me to take care. Yeah, thank you. I'll take care of myself. Thanks. Let's move on. Punti, like to check if it is feasible, every week or month we do a poll on a particular stock or sector to discuss, then set a time, 2 hours range. We in group discuss. Okay. I think a bit hard. Okay. The reason is because for the Telegram group, right? It's not like everyone free at the same time. Okay. So people will come and check when they're free. So if you set a time frame of 2 hours, I would say there are many people who are interested that are not able to participate. But let's say if there's a lot of like interest with any stock or sector to discuss, right? Even if we set 24 hours, right? People will discuss. And we are doing this actively anyway. So let's say if you have anything to discuss, feel free to raise in the group. I think there are people who want to discuss, okay? But of course, there will be some company that you suggest, and then people just quiet, just not because people ignore you. It's just because people haven't really read up about the company or sector. They just don't have opinion, or they just want to listen and not participate in, right? I mean, there are many reasons not to participate. So I think that's the logistic challenges. But if you say let's allocate 2 hours, we do all this TCSS. If any one of you just request to have, let's say, 1 hour discussion, and you want to present something, but you don't want me to upload onto YouTube, right? Just request, just reach out to me. We can arrange this kind of discussion. You know, our group is still quite a small niche group, right? Even this video, even I post it on the public platforms, right? Let's say if you have Zoom call, people join in, you voice out. You are not become popular just because of this. Because it's still a small channel, long video, not many people watch. If you want to have an interactive discussion, if you request me to unlist it or not to upload it, I think we can of course arrange, like depending on your needs. And if you want to do presentation, feel free. I'm happy. Actually, I host this in the past. But again, all this, right? If the effort is on you, like you propose anything, right? The effort is on you, you prepare, then you do a sharing. I think we can accommodate easily. But if the effort is on other people, you want other people to set aside 2 hours, you want other people to join the live session to discuss, whenever the burden or the effort is on someone else, right, or on other group members, I think this one we need to coordinate is a lot more difficult, okay? Just not to say people are not helpful, it's just more on the logistic side. Yeah, that's my comment on this. All right, 3 statements here. Let me read all together. After companies train their AI models using NVIDIA chips in the cloud, do they need to perform inference using the same chips or cloud providers? Typically, what is the time frame between a cloud provider acquiring NVIDIA chips and making them available for companies to rent for AI training? How long does it usually take for AI training and inference processes to generate revenue? Well, I think this is very detailed questions that I may not be able to comment in details. I know a bit, not able to give a good answer here. On the first questions, right, if they train on NVIDIA chips, do they need to do inference using NVIDIA chips? I think my first impression is no, I don't think so. You can always use other chips. It's just that how much you need to do to use other chips, that could be something that's very hard. Or if even if you use other chips, it may not be performing as well as back to using NVIDIA chips. So that's the reason, right? It's not. I don't think there's not anything that cannot be done. Even if you ask me, right, today, can one company do something that is very similar to ChatGPT without using NVIDIA at all, right? I would say the answer is no. Of course, there are competing hardware, software that allow you to do that. That there's nothing that other companies cannot do. It just, the question is at what cost, okay? Because the selling points of NVIDIA is that, oh, you just onboard on this platform, you just get my GPU, your engineers is running right away, things are already optimized, you can get up to speed very fast, then boom, you can get it done for in 6 months, for example. Then the moment you said, oh, you cannot touch NVIDIA at all, okay? Then that's where the things get very difficult, right? Or maybe they have certain things, and then there's one piece that you need to use NVIDIA library. Then because you don't have that part, you need to reinvent something on your own. Then you need to spend a lot of time, effort, cost to just make sure that small piece is there. So in these situations, the whole thing becomes a lot more costly as compared to just use NVIDIA, right? It's the easiest way to do it. It's the cheapest way to do it. So I think that's the situations now. Then on second questions, what is the time frame between a cloud providers acquiring NVIDIA chips and making them available for companies to rent for AI training? I think this one is very fast because you also don't want all these companies to like buy all these AI chips, and then you in terms of setup on the cloud, you are slow. All these chips piling up for 3 to 6 months doing nothing there. You also don't want to do that, right? Because it's very costly. All these chips, right? They cost tens of millions, hundreds of millions. You're not going to do that, right? So they really time it well so that the moment all these chips are supplied, they park into the all this data center, then it's available on the cloud, and then it's available for any companies to access it through API or using cloud, right? So I think this part is right. There's continuous effort in buying the chips, building up data centers, and then renting out. So things are happening on a continuous basis. So I think the entire things from end to end, right? The end to end also depends on where you start, These entire things end to end, it could be from, let's say NVIDIA already announced the B200 chip, right? Then what happened now? Because then in order to make use of all these chips, maybe from CUDA side, is it everything's is optimized directly, or is it like all these user have to do anything to fine tune and things like that? So it also depends on when you count the starting point, right? So I think it's this entire end to end process, I would say, is counted in months, maybe as short as like 3 to 9 months things. That's my feel. But again, I'm not expert on these areas, and I think these questions, if you need to be precise in terms of where you count the starting point and the end point, right? Yeah, that's my feel. How long does it usually take for AI training and inference process to generate revenue? Again, it really depends, right, on where you start to count, like where's the start and end. Because the training, right, the training is the one that is consuming a lot of time. Like last time, they used to take weeks or even months to train. Now, I think it's getting better. Maybe it's days, right? And it depends on the model size. So there's a lot of parameters to consider. Then from there, the inference, right, is just like API inference. Basically, anyone use API, the input need to get through the model, and then after the process, if speed up the output, just go through that, right? So revenue, you need to ask like revenue for who? Because if you are asking for the cloud providers, right, it's very fast. It's like just metering. It's almost like you buying electricity, right? The moment you use, then your electricity meter is running, and you need to settle the bill. So like I say, it depends on you are referring to which party. Yeah, I think that's my comment. Wow, asking me all these hard questions, man. When the US market is at all-time high and I have stopped my DCA in February 2024, should I resume my SPY DCA or look into US or China individual stocks? I think if you have DCA, right, meaning that dollar cost averaging, right, you really just set up and forget. Every month, it could be smaller amount. You don't do like big DCA every month. You just do like a smaller streams, right? But the moment you call it DCA, I would just say you set it up and just let it run. You need to run it for years, and then you can see your portfolio slowly building up, building up, building up. The moment you say you stop, the moment you say you sell, and then you do something else, you are not focused already. Your focus is not in building the portfolio already. Your focus suddenly now become like sell, like buy low, sell high. Then you know mentally you become a trader. So you do things actively here and there. It's not to say right or wrong. It's more like the moment you shift to a trader mindset, right? You're looking for win. You're looking for I need to buy low, sell high. Then if I don't know how to buy low, sell high, I'm stuck already. Then if you have this kind of mindset, right, you can do this for 1 year, 2 years, 3 years, 5 years. Then I ask you, hey, actually your portfolio, how much have your portfolio grown, right? Then you are a bit stuck, like, oh, do I have a portfolio? Or maybe I have some cash here and there. So it's not a conscious effort of like building portfolio. Whereas for us, right, we call ourselves invest for long term, right? Really, the entire thing start up with like, okay, I start up with building my portfolio. I saw someone has like 500K portfolio. Today, I don't have 500K. I might have, let's say, 50K. But I want to project myself from 50 to 500K, right? How do I achieve that, right? So the question is like the timing. From 50 to 500, okay? What do I do now? Every month, I put in 1,000, okay? 1,000, keep on buy. Buy what? Could be as simple as just buy the world ETF, right? Just doing this world ETF buy, and you just don't want to do too much of like, oh, I want to time the market. I see the market price up, I buy more. Market drop, I buy less. It crash, I buy more. All these things to me is too active. And the moment you are active when it comes to the timing, right? My questions to you, are you a good timing investor or timing trader? Can you time the market? If you say you can time, then okay lah, feel free to do it. But if you say, no, I actually don't know how to time, then I say, just do the dollar cost averaging. Every month, 1K in, then forget about it. 1K in, forget about it, right? Then you do it, like, at least I can promise you, right? Like, this is the expectation you can form, is that you put in 1K a month. After 3 months, right, I would say your portfolio is about 3K. The market red or green, it will decide whether your portfolio at that time, right, is between 2,700 or 3,300. That's the variation. Then after 6 months, right, it will be between 5,500 to, let's say, 6,500. But after 1 year, right, it will be between 10,000 to 14,000, right? But you can see the trend, right? There's some variation. That variation is caused by the market volatility. But the portfolio, of course, it is going up because you are actively putting money in, right? So, and you start to see your portfolio build out already. It could be, like 10K already. Then after another year, it's already like 20 plus K, right? Then you see that, oh, actually, I have more saving now. I can put in more. I don't have to just put in 1K. I can put in 1.5K. And then once you put in 1.5K, right? Then I would tell you, don't suddenly make it become 1K again. Just now continue with the 1.5K. Just continue to put in 1.5, 1.5, 1.5. Then you can see that slowly your portfolio is starting to build up even faster. Then after a few years, you can see that, oh, now I am at 250K already. It's much more closer to the 500K target that I have, right? The key things about all this is consistency. It isn't so much about like, oh, market at all-time high, then I stop. What's the point of how to build a portfolio if you just stop there, right? So I think that's the things. Just the consistency is very important. Okay, the last one. Bunti, got any inputs for property ownership for singles? For some context, I'm a forever single 28 years old female, 5K monthly income. Okay, my questions to you, right, is that are you Singaporean or no? Because I imagine that, let's say if you are Singaporean and you are single you can buy a property, you can BTO when you are 35 years old, right? So, and if you're single, probably you are staying with your parent, you can just continue to stay with your parent for seven more years, and then you can continue with your BTO journey, right? So I think that's the typical journey, or the standard journey, if you want to own a property, and I mean, you can BTO. That's my questions. My immediate response to this. And if you are not Singaporean, I think after I need to read the rules again. But if your income is 5K, I don't think condo is it makes sense to buy condo. It's too far away. You look at the condo price right now, right? Easily 1.5 million, 1.7 million. With 5K monthly incomes, I don't think this is something that is achievable. It doesn't make sense. Just say, continue with wherever you are staying now. Maybe you can consider BTO when you are 35. That's the property ownerships. Then in terms of your saving, I think maybe just if you can continue to stay with your parent, why not just continue to stay, right? And then just focus on your investment into like stock investment, or some REITs investment, or some like fixed income or T-bill investment. I think these are the stuff that you can do. You can DCA, you can build a portfolio. The bar is very low. The steps are very simple. Nothing fancy about like doing all this investment, right? Especially if just buy a ETF. So I think that's the investment part lah. But property ownership, I have nothing more to comment here. If you have more follow-up, like specific questions, feel free to leave it down here. But other than that, I'll just say BTO is the way lah. Just do the Singaporean way. All right. Thank you so much for everyone who tuned in live. I just realized that we've been chatting about 2 hours now. I'll end the session here. Thank you so much for joining. See you. Bye bye.